Hi, everyone. It's just another Tuesday. Once again, it's 10 a.m., and this is another episode of Disruption Talks. And today's topic will be Insurtech, but I want to make a complete sidetrack to begin with because insurance is a very interesting business. But recently, I've been rewatching one of my favorite TV shows. It's called The Mentalist. It's actor Simon Baker. I really recommend it. And of course, we know there are no psychics, there are no mediums. No one is able to read the future and know what's going to happen. However, with insurance, the business is trying to predict it. It's trying to figure out what's going to happen, what's the likelihood, what's the risk profile, what can we offer to this customer, and when is the risk just too high. And of course, the way the companies used to assess it way back is not the way that they are assessing it right now. We know that companies such as car insurance, they are giving you a device that tracks the movement of your car, which is able to much more loyally display how good of a driver you are and what happened in the moment of the accident. So joining us today is Sergi, the CTO of wefox, a behemoth of an insurtech that's been funded to the tune of almost 300 million, and with some rumors of more funding that will match what you already have. I think this is a very good time to talk to you. So welcome to Disruption Talks. Hi.
Hi, thank you very much for having me here.
It's a pleasure. It's a pleasure. What we usually do is start with a short personal introduction. We begin with the person, company, industry. So I would love to hear a little bit about yourself before wefox and when you joined wefox.
Yes, so I joined wefox 6 years ago. Before I was working in technology consultancy, so being looking in different, working for different projects on different industries. I really didn't attach myself to a particular industry. I was working mainly in retail and as well in seats. And basically, I got the opportunity to start wefox. I say start because I was one of the first employee, actually of the first three. Together with the founders, and we started basically making the first part of wefox as a B2C company. And from myself, I will say that I really like scuba diving. I'm a diver. I really like peace, calm, and all kind of technology. So yeah, I will say that this is a quick introduction about myself.
It is, but I need to ask you, what does a day in the life of a CDO at a company the size of wefox, with the ambitions of wefox, what does that day look like for you?
I think that I didn't have 2 days equal, or 2 days that looks the same. Always it's different challenges, and even more in a really growing company like the one that we have, with really accomplishing year-over-year growth of 3x, something like this that we have. Really big challenges in a really big industry like insurance. So my day looks waking up early. I'm not part of the 6 a.m. club or this kind of philosophy. I really like more like 8, something like this. Take a good breakfast and really a good coffee. Without coffee, I'm not working. Simply, I'm not a person. So I join, I answer emails, and later from 9 to 9, almost full of meetings. So 30 minutes meetings with everybody, enable the people. This is my work at the end, and really getting decisions done, organization, communication, and really, I will say that today it's completely different than, for example, 1 year ago, and even totally much more different than before due to the situation that we are. It's difficult to manage a team from remote. We were already, let's say, used to working remote, but we always had the office. We had the talking points in person with the team and the team members, and this was much more easy. But basically, right now, it's about videos, about trying to express, transfer energy from the camera, also on. So it's totally different. A different communication style, different gestures, everything.
Okay. I mean, you've essentially started one of the next points about COVID. That's like the always happening topic with every conversation, right? But first, very nice blouse. Is that a rebranding that I see? Could you tell us a little bit more about that?
Yes, so recently, 2 weeks ago, we announced our rebranding. With the growth of our company, we're creating different brands for different consumers and different parts of our overall marketplace. And basically, we wanted to simplify. One of our strengths, we believe in insurance, it's simplification, make it simple for the customer. So we had to start by ourselves, by our brand. So we took the opportunity on 2020 to basically unify our brands, everything under one single name that is wefox, change the colors, change the proposition, and we launched it 2 weeks ago. And for sure, I'm enjoying my new brand and my new hoodie here in front of you.
I really like the website. It's really clean. But let's go into COVID. Dive right in. So I always ask this question, and usually people tell me that it's been a good thing for their business in the sense of digitalization. However, please tell me, for insurance and for wefox, was it a accelerant, blocker, a little bit of both? How did you take it from the first steps to the moment when you started to like ride the wave of the change?
So I will say a little bit of both. We were digital already, so it's not that has been good for us for due to digitalization. We were digital. We were a digital insurance company, so we don't work with paper. We don't work with personal advice. So we believe more in enabling our advisors with technology. And this is why we were not really hit by COVID on the company perspective. But on, as I was saying, on the way of working on the company, completely drastically changed. I remember that 1 year ago, the people start to say, "Oh, this is going to change the paradigm of working. People want to work 100% remote. The company doesn't going to have an office anymore." And now I have people in my team, in my company, and asking me every single day when we can go back to the office. And when can we meet? When can we do a whiteboard session where we can basically bring topics together? And I think that this is something that we cannot basically get rid of because you can, in a 5 minutes talk in person with a six in a meeting room, you make much more than in 1 or 2 hours meeting via Zoom or via a video conferencing. Regarding our business, due that we distribute insurance fully digital and via technology like its APIs to our partners, we have been able to make focus on our brand, focus on our customers, and be customer centric again. Get rid of some parts of the business that basically we wanted to shuffle and that were part of our past. And we basically were ready to launch for 2021 our new brand, the full proposition, and all our new products with really looking really well, let's say.
And speaking of this transition or those expectations that you mentioned, what's your prediction? What's your bet? Do you think that we will see, let's say, option A, a situation in which offices will be a luxury only for the top ones because remote just makes sense economically for companies? Will we see people wanting to have a hybrid because some people don't have the environment at home? Some people just like to come to the office for, change of scenery, meet the people. Or do you think that, for example, things like HoloLens that a couple of years ago with mixed reality were just a very nice dream that personally got me very excited because I love gadgets. But, right now, maybe there's a scenario 3 in which we figure out, okay, the office, but how do we transfer those physical interactions that require being in the same location into semi-physical interactions that allow you to have the whiteboard meeting if someone else is in the same reality but in a virtual way on the other side of the globe? What do you think about that?
So let me differentiate 2 parts. The first one that is basically what the short term from my perspective, what I believe. I think that basically companies have to get used to don't have everybody in the office. The office should be a place to meet, not a place to work. I think that this is the big change that it's gonna come. An office where the people goes, sit, work with two screens, and leave, doesn't make sense anymore. It's a place where basically people can connect, can interact, can basically enable themselves, and the office should be basically remove half of the seats that they were having, focus more on having some spaces to make the people more creative, work together in innovation, working on new ideas and experiment new things. And later they can go back home and work, focus full time. Okay. As well, we have to acknowledge that not everybody have a really good space at home to work, and kids, differentiation in between work-life balance. It's really important. So I will say that we in the short term, the company is going to have to find this compromise of really giving the employee and the team freedom to select what they want, and as well giving them as well a place where they can meet and interact with each other. This, from my perspective, is the short term. Now, futuristic, long term, I really think that technology have to evolve much more to basically close the gap here. Things like you are saying, where the wall of gamifying employees and really technology and meeting together or interconnect, like could be virtual reality. This could be a possibility. But this will bring a new challenges, like is the differentiation between fun and work, where basically we are in a virtual reality world, but we are here to work. We are not here to just having fun. So this thin line, it's something that basically it's gonna have to be really agreed with the employees, and as well making sure that it's not absorbing this new way of working, because virtual reality, as it is evolving, it's something that can be absorbing from to you. You can connect everywhere, whenever you want, but really connect to all your senses. And this can be really something that we're going to bring new challenges. But this is basically at the end, evolution.
We are only 13 minutes into the talk, and I can tell you this answer is the best answer I have received ever on live or in personal interactions when it comes to the future of work. This is a very, very clever way of looking at it. So thank you for that. And I'm sure that the team is already preparing quotes from what you said, how the office is for meetings and creativity, not for just a place to work. So on to a little bit more about wefox itself. So I read an article recently. That's why I started with magic and psychics at the beginning, that said that you are creating a smartphone product that is supposed to predict any risks that I might encounter. Could you tell us on a technological plane, how does it work? Because I assume that we have many sensors in the phone. We have location, we have the accelerometer, so we know whether someone fell or not. We also have the watches, which give us a little bit more into terms of blood oxygen, any heart rate issues, microphone, a lot of stuff. So how exactly is the technology indistinguishable from magic here if you're supposed to predict any danger with my phone in my pocket?
So I really like the Mentalist as well. I think that it's a good TV series. And as you say, there is no really magic, and there is no 100% proof or of a risk going to happen. Then here we are playing with probabilities and mathematics, and it's about estimations of an individual. And here we work with what it's called predicting behavior. So it's try to understand through technology, through data, how an individual is at the end, how it's behaving. Let's make an example that is basically through the mobile phone, the device that we have all of us in our pocket, with the information of accelerometer and GPS, your position. We are able to know your driving behavior, as example. This is not something really difficult to do, and we can analyze yourself. Now, when you have basically in detail a person and the person behavior, you have as a company to make a really big decision. You use this information for yourself or for the individual. What does it mean for yourself? An insurance company may decide, okay, I analyze the behavior of this person, and he has a really risk driving behavior. Okay, He speed a lot over the limit, turn left, right. He checks the phone when he is driving. So I'm not interested on having this individual. This could be a decision. Actually, is the most easy decision for an insurance because and you try to avoid to deal with this problem. Now, what are Insurtechs or in concrete wefox doing? In wefox, we believe that basically we can reduce your risk, not by predicting that an accident is going to happen, by telling you, hey, be careful, you are having a really huge risk by driving in the way that you drive. Why we don't together minimize the risk and make it good for you. So, for example, some people doesn't realize of the risk of checking the phone or how many times he checks the phone while driving. And later, by simply saying him, "Hey, this right, you check 10 times the phone. This is too much. Be careful. Let's reduce it." And by if the next ride it's only checking it 5, you congratulate him. Hey, good job. You have reduced 50% the way that basically you are checking or the driving behavior that you have. This coaching through a digital interface is what makes risk reduction, and is what it's not only trying to predict an accident for happening, because this is something that it's much more difficult and you need more connection, more customer here, is changing the behavior of the person towards risk facing. And this is our base for the product. I can give you another example. For example, smoking. I don't know if I'm sure that somebody in the audience smoke, and I'm sure that if I ask them, do you want to stop smoking? They will say, yes, I want. Because the majority of people that smoke normally say, yeah, yes, I want to stop smoking. Smoking is one of the biggest risks for insurance and for health that exist, identify and risk. And really, it's clearly between you smoke, higher risk. Normally in an insurance company, you have to answer a questionnaire, a health questionnaire, that one of the questions is, do you smoke? Yes, no. If you mark yes, automatically your premium, the fee that you pay for the insurance, increase, and sometimes dramatically. But basically, normally a health policy have a duration of 3, 4, 5 years, even longer if you are loyal to the company. Okay, but you may start or stop smoking in after 1 month or something like this. What we do, which is our approach, we say, okay, do you smoke? Yes, perfect. Why you don't connect your smart cigarette to the application? And we are basically, what we're gonna do together is working in a X weeks program where basically we can reduce your risk of smoking. And if the customer signs in, opt in, he say, okay, let's go. He connects the smart cigarette, and we identify that he smokes 7 times per day. One after breakfast, another after breakfast, later before dinner, launching, also on. So basically smokes 7 times per day. And we, after analyzing his driving, his smoking behavior, we say, okay, why you don't stop smoking? Really, the first one, and you go directly to having breakfast. This is something that it's a changing on behavior that it's easy for a person. I wake up, and instead of smoking, I go directly to have breakfast. If the individual make it, if the customer make it, then you congratulate him. Congratulations, you reduce a 15% your risk of having an injury from smoking. And what you after this do you want to continue? And if he want to continue, then you reward him by basically having a reduce of the premium. If the fee was increased by 100 euros due to smoking, and he had reduced at 15% the smoking behavior, then you reduce him 15 euros, as example. And in this way, you work in a coaching of the individuals. Of course, here, being the CTO, I have to say that you cannot put a person following everybody, all your employees, by coaching them, trying to having them. So this is why our investments are on basically not only identifying risk and trying to predict risk, it's as well predicting behavior and coaching to the people, how we can coach every single individual. And let me say that most likely your coaching, the way that and the application will have to coach you will be completely different than myself or another person that maybe it's older. And this is where we invest a lot of in technology to understanding each individual and what works and doesn't work. Maybe some people know more data, some other people understanding more the risk and the consequences, also on. And this is where our product on risk prevention is going.
A question that I immediately have that is connected actually with a question that I see in the audience. And let me read Pavel's question first, and then I'll join with mine. He says, changing habits is not easy. Can you share some examples how effective are smart solutions you mentioned making people drive safer, smoke less? And I want to build on top of that question in terms of like the business aspect, because usually you would have two parties. You would have the insurer and the person being insured. So typically, if there's any behavior displayed that would increase your risk, the insurer would sort of immediately want to react and increase your premiums, or perhaps even reshape your policy and have you sign it again. Here, in this occasion, you are making a bet on humanity in some sense. You are assuming that people have good intentions. You are assuming that through coaching, you will be able to manage the risk, not just predict it, but also manage it. So where do you draw the line? If you see someone, just like you mentioned, we said smoking, we said driving, someone drives stupidly or takes out the phone, it's 10 times, it doesn't fall down. Where do you draw the line? When do you say, this has been enough, we have been nice, this is the time where we change the cooperation between us, because we are sort of giving you the benefit of the doubt that you will want to better yourself for your sake and wefox's sake, but you don't. So I guess Pavel's question and mine are sort of connected in that sense. How do you basically manage changing habits effectively?
Yeah, so let's start by Pavel question. So how effective they are, as much as basically the individual wants. You cannot coach a person that doesn't want to be coached. Okay, this is the first thing. So this is why it's a complementary thing that we offer. So the person should basically opt in to have this kind of product. It's not something that basically we impose to the person. Why we are saying this is because until a person doesn't really believe that he has to improve or he can improve, that will not basically change his behavior. Okay, so this is already the first barrier, that it's basically we are assuming that the people that take this kind of product want this kind of product. Okay, it's not only looking for a reduction on the fee that he pays. He wants to basically know more about his risk and changing it. If not, he have the ability to purchase a simple product from us, and it's a typical product, full digital. He can basically turn on and turn off all the coverages, but it's a static insurance product. Later, where we draw the line. So here, of course, it's not basically that the risk increase. It's basically to check the behavior improvement. So if you are seeing that the individual is improving, his behavior is seen, it's basically willing to change, and it's basically pushing towards having a less risk. At the end, you have to keep in mind that when he comes from a static product, that he should analyze, that we already have analyzed their maximum risk. So he's covered. From the insurance perspective, he's covered, independent of his behavior or his amount of risk. So later, how we basically draw the line is you don't get rewarded if you don't improve your behavior. So eventually, if he doesn't improve, if he basically doesn't change his behavior, he will having like a normal static insurance product like any other one. So always the baseline is you have already a product with us that it's a static, but you want to improve your behavior. So there is this willingness to make it happen.
Okay. I feel that my question has been answered. I was just curious, like, when do you stop being the parent that allows the child to make the wrong decisions, so to say? Another topic that I wanted to ask is, we spoke about wefox Prevent, because that's the name, right? I'm saying that correctly. along the news of that, I've read on a website cashless.pl that you might be entering Poland with a partner insurer. You are on some wave of expansion, surely. Would you comment on that?
Yeah, absolutely. So, yes, we are looking to new markets in Europe with different formulas and different partnerships. And you may already have read as well, is that we are not a B2C brand or position company. So we are not trying to acquire customers by online marketing. We really believe on having partners and having people advising the customers. And this is why we look on this market for a really, ideally the best partner to launch our products. We have Poland. We're going to be targeting on Europe, first of all, on the coming year. But for sure, we are preparing for further expansion to the east and to the west, for sure.
Okay. And out of curiosity, in the previous expansions that you might have, or any sort of new regions, is the sort of cultural approach or cultural behaviors in terms of the perception of insurtech, do they vary between countries that much? Do you see, for example, certain habits being huge in a country and certain habits being absolutely non-existent in a country? Is it that polarized, or are those sort of similar differences across the whole scheme?
Yeah, absolutely. And the biggest changes on expansion are lines of business. So the different countries have different type of lines of business. I always put the example of, for example, Switzerland health. It's full private, and Germany have both private and public. And in Spain, it's even if we have both, and the public one, it's really good. So it's much more. And the fees for the customers change a lot. The coverage change a lot. So here, basically, we see a really different on lines of business and products. So this is why every time that we release into a new country, we have to tailor really well our products and our proposition for that particular country. In terms of behavior as well, there is more countries have more fraud for certain products, that some others have a really huge competition in the market, like will be, for example, car in Spain or Italy, as example, are really huge markets, but with a lot of companies and competition. And here, the kind of products that we are targeting, it's completely different. It's more like make it simple for the customer, make it simple in terms of switching. We have a switch product that is called with basically the minimum amount of questions possible. A customer can switch and continue maintaining his coverages and that from the previous one, and plus having all the digital interface and everything that we offer. And in terms of this more behavior, not only in fraud as well in willingness to share data, as well, we see a different behavior from the more north of Europe to the more south of Europe, where basically the north are more concerned about sharing data than the south, where basically they are more willing to share data for having a service.
Okay, that's a very cool piece of information. So let's talk about the industry. We already started anyway. So we've seen situations like, I think, Snowflake IPO, Lemonade IPO. Generally, insurtech is booming, right? We had neobanks and the incumbents, like the typical banks and Revolut, and now we're seeing a similar wave when it comes to the incumbents facing the innovator's dilemma and companies like wefox simply blowing everybody out of the water. So could you give us a general rundown of the state of play of the industry?
So we usually say that insurtech is between 4 or 5 years behind fintech or banking. What we have seen on banking, we can expect to happen in insurtech. Why it's behind? It's due to the complexity of the products. Banking and the majority have been basically around savings accounts and things like this. And insurance, you need a really a license behind you in order to create these products. So it's really more close. industry. Let's not forget that it's a regulated industry, so it's not easy for a startup. This I can tell you that you have to face regulations, governance. You have to have mature processes. When normally these things with a startup doesn't match. Normally it's totally the opposite. And a startup and Insurtech. So the industry right now, it's we have a lot of players trying to solve a particular part of the value chain, from more sales, distribution to the production, claims, digitalization. A lot of products and insurtechs are focused on helping big insurance companies to digitalize themselves. But let me say that in order to disrupt the market, like we are trying and we are doing, you need to be really big. You need to focus not only in one part, like could be distribution or the product creation or the claims. You have to focus on everything. And this normally for a startup, it means a lot of investment, means growth, means focusing a lot of things. And you have to be able to really have and work independently and together in all these different areas. This is why if you see other companies that are digital companies, they are as well focused on everything. Focus on trying to acquire customers, on creating new products, investing in technology, and so on. So we have these two parts. We have the insurance and the insurtechs that are in the market, where the biggest problem that they are having is that acquiring customer via marketing acquisition drive them what it's called loss ratio, really high. So at the end, they pay a lot to these customers, and let's say they are not really good customers. And what happens is that the profitability gets impacted to them. And we have the other part of the industry that it's the big insurance companies where basically where they are having other challenges, like could be the digitalization, the automation, also on. What we try to focus on the last 6 years is to basically position ourselves in end-to-end in the market, from the distribution to really the production, and being able to and grow everything through technology. And this has made that we can focus on the balance and the trade-off between profitability and automation, through automation, and as well acquiring and growth of the customers with our advisors, for sure. This I will say that it's a really summary of the industry.
It is. It's great. And actually, last week, or not 2 weeks, last week, sorry, we had the VP of product from Solaris Bank, Florian Redeker, and we spoke about banking as a service. Is there something like insurance as a service? Because with banking as a service, it's about having the license and sort of outsourcing it elsewhere. Do you envision a world in which an insurtech can also do IaaS, insurance as a service, to another company that wants to sort of resell your services?
Well, at the end, as a carrier of risk, we have the opportunity to white label our products. So our product, we can basically give it as a service to another company. So this model in insurance is called MGAs, and we definitely are doing it. So we create our products, and we extend it, and to give the opportunity to partners that they want to distribute and focus more on customer acquisition and really value proposition to the customer, while we insure the risk and we offer our services to them. Our purpose, or the purpose of our company, is make the people be safe. And we don't say make our customers be safe. We mean the people in general. So this as well, we believe that basically our services and our technology can be shared with other insurance companies that may not have or cannot create their own one, and they want to basically use the technology to improve the life of their customers. So for us, it's totally fine to give them and the opportunity to connect to our services, of course, via API and digital to our platform, and that they can basically use all our technology for the benefit of their customers.
You are a fantastic guest speaker, because each of your answers already transitions into the question that I want to ask next. And when we speak about bettering the whole of mankind, because a bad driver, if they have an accident, they're not having the accident on their own. Everybody else on the road also might be in that accident. If I'm smoking, probably someone is getting that secondhand smoke. So I see completely what you say about sort of the ripple effects, second order effects of the things that we do. So now, in the words of the Silicon Valley TV show, let's talk about tethics, some tech ethics. Data sourcing. What are the risks, privacy concerns? We've seen that with the creation of your own profile. If you go to ad settings, Google, I think that's the domain, it will show you your profile that Google has created based on you. But it says rather innocent things, such as you probably drive this type of car or you have an undergraduate degree. In Insurtech, of course, the more data you have, the both in breadth and in volume, you can simply create better solutions for wefox and for not just the customers, but all the people. So these aren't data that are as light as what I mentioned about what kind of car I drive. These are usually some very private medical things. Sometimes people used to go to the doctor because they would have this discretion, right? Whilst here with the digitization, even I recently logged on to our Polish service and I was surprised to see that all of the prescriptions that I had were simply in one place. So the thought that I immediately had was, okay, I need to change my password, first of all. And second of all, how do we make sure, and not even about like the malicious actor of anybody trying to do something with that data, but where, once again, do you draw the line between having that data and not doing anything wrong with that data?
So at the end, let's imagine, or let's make or simplify the game of insurance. So normally insurance is you have a problem, I help you, right? You as a customer have a problem, a damage or whatever, and I help you financially. So this, let me say that it's a lose-lose situation. You had the problem and I have to pay, right? So it's you lose, I lose. It's not really nice. So what has happened in the industry has been that basically they have tried to turn it to a lose-win. So you have the problem, I try to pay you as less as possible, but there has basically this lose-win has been lose-lose because you have damage of reputation, you don't have loyalty of the customers switch from one year to another also. So how we can change from a lose-lose to a win-win? That is basically you don't have the problem, and I don't pay you because you don't have the problem, you know? So this is basically where our service enters and where data joins to the equation. I totally understand the concerns of sharing data to companies, that they use this data for their own benefit. But if we use data for the benefit of the customer, like it's basically our ethics and where we want to really help the customer, that is, as much data you share, I'm going to try to minimize your risk. This is the service that we give. At the end, if a customer or a person, you explain really well, what are you going to do with the information? What are you going to do with the data? What are you trying to make for him? And really transparent and clearly, I'm trying to reduce your risk. I'm not trying to sell you a newer sneakers. I'm trying to reduce your risk because it's, for me, it's good, but also it's good for you. Then when you explain this information is where the customer understands it really well and really is willing to share the information. Nevertheless, as I said as well, this is something that we believe that should be an opt-in for the person. It's not something that basically we are gathering information of the customers if they are not sharing this information. And we are not making any profile or risk analysis of the customer through accessing to the data and things like this, if basically he doesn't sign in and opt in to share his data. And we have the work to do, of course, to make every single customer understand why each information is needed.
Completely satisfies my thirst for knowledge about that question. Proactive risk establishment, because that's the business you're in, right? What's the next big thing? What's like the, I don't know, if we have PlayStation 5, what's the PlayStation 6 and the next virtual reality headset? What's that for Insurtech? Smart contracts, automatic arbitrage, adjusting that like on a Uber-like level of surge pricing, like whenever things are more riskier during, I don't know, public events, for example, if you're traveling and you want to take out a policy for those specific dates of Euro 2021, for example?
So from our belief, it's around understanding your surrounding as a customer, and being covered 100% and full digital. This for us, it's basically what we believe that it's gonna be the focus on. You currently, as a customer, we see that the people, it's starting to be tied to a particular brand if they give a good service. And we can say basically Google. They give you a good service, you use YouTube, you use Google Maps, you use more and more of their services because it's more complement. And in insurance, going to happen the same. So basically, customers have a need to have basically in one single place or their things covered. And basically, I have not to deal with bundles, not to deal with this product plus this one covers me everything or from different insurances. It's around, okay, I enter in a place, I give them my information, they basically say me what it's needed to be covered, and have this what we call one policy, that it's one single policy insurance contract that covers you everything. If basically here we add our proposition of prevention, and you get discounted by incentivizing and coaching the person on good behavior, and you get basically, as a customer, you get everything. Full coverage if something bad happens, and trying to avoiding that something bad happens around you. We have seen that basically the world is changing drastically and outside, and it's really important for an insurance company be able to adapt themselves as fast as the world change, okay, from one day to another. And this means coverages, this means products, this means the value proposition and the protection to these customers. And this is basically the new thing. The new thing is the ability to release new products into the market as fast as the market change. And you have said, basically, we have new things launching the market that that increase drastically the potential. We have seen that basically the world is changing, climate change is changing fast than what we expected, and things like this. These are risks to the people, and this is basically something that the insurance companies in the risk protection area that they have to adapt quickly to the market, and this is basically what is the new, the new part, and the new innovations.
And on top of that, there's a philosophical question almost. So like you mentioned, world of change, but at the same time, even when we just look at what's going on with cars, autonomous vehicles are going to be a reality, maybe not a standard, but let's say in 10 years' time, I think it's going to be visible on the streets of the most metropolitan areas. So the question here is it possible that an environment for mankind will be created that's so safe, with, for example, house being so fireproof that it's almost statistically impossible for a fire to be started, or cars in a network that they all talk to each other? And then doesn't insurance, like, you are working to create a safe world, but is there a world which is so safe that insurance sort of pushes itself out of the business because it made the world so safe?
I see here the philosophical part, and really, I will be able to speak for an hour just in this question. So I will say that first of all, I will be really happy if we are able to make the world the safer, 100% safe. I will be happy to be out of the question. Let me say, because this will be basically something that will to our understanding will make the world better. Let me say that basically we don't have to forget the human part of the question, where basically we like the risk. We basically go sometimes against the rules, and there is basically a free some degrees of freedoms of potential risks to happen. So the probability of that this basically world exists, it's quite difficult or really low probable. And also, let me say that basically by having a full, basically a digital solution as really create a safe world as well will create some other risk. That is, for example, risk of absorption, where basically if you feel so safe, you basically can drive some mental problems and mental risk, where basically also have to basically be and we be coach or be work on and protect the customers or the people. And this is why basically it's something that it's an evolution. We may protect the people and make safer the people in the world of certain things from happening, like could be car crashing or things like this. But this will basically erase new kind of risk that we cannot even think right now. And as I said, let's basically take, for example, climate change as example. This is basically opening new risk, and is basically that for the humanity and for everybody and the people, that it's gonna have to be targeted in the future, and it's not depending of car from cashing as example.
Maria, I hope that answers your question. It answered mine. So now I have two of my own questions left. Then we have a couple from the audience. We're on the 46 minutes, so we should be wrapping up just on time. The last two questions that I have, we always ask those questions to our guests because they're universal. They're not about the company. They're not about the industry. They're about you. So question number one, what is your decision-making framework? What is your rule of thumb? And it doesn't have to be specific in terms of I make a decision about this part of the engineering team. It can be broad. It can be something that's like the basic principles that always help you make the right decision as a CTO.
Well, let me start by the final part of the question of your sentence. I'm not sure that I am always making the right decision. So this is the first thing. What for me the framework is, and it's something that I learned through this working with folks. There is always a solution. There is always a solution. This is basically what I really find that even if you can feel that everything is going against you, that everything is pushing you back, that there is no possibility, no solution, at the end, you're gonna basically be speaking about this problem in the future by somebody and really sharing your experience. So with this in mind, then when you have to make a decision, then you always have to understand that if I don't make it properly or we don't make it properly, we're gonna find a solution in the future. We're gonna assume the consequence. We're gonna learn and we're gonna push forward. And what it's important, and this it's really tied to what it's called agile mindset in technology. It's basically you take a lot of decisions and you try to fail often and fail forward. So trying all the time that basically making sure that if you are failing, it's you fail short, let's say like this, that is not that you don't take you too much time, resources, energy, or whatever, and that you try to basically iterate and push basically together. And for sure, here it's basically team playing. So we are in a world and with problems that cannot be solved by one single expert. Nobody creates anything alone. So here I really rely on my entire team, and I always ask them basically that they should be part of the solution and not part of the problem. Whenever they are part of the solution and they bring with, hey, we have this problem, but we want to do this thing, then the decision is obvious because they are bringing the solution. And at the end, it's if we have as a company hiring a team, it's in order that they or the team tell me what we have to do rather than me telling them what they have to do. This I would say that it's my decision framework.
Yeah, and whilst the sort of the further we went into the answer, it got more and more practical. I think sort of the idea, the concept of there's always a solution is a very, very nice. I love it. I love it. So the next question for me, and the last one, is I give you a magic wand. You can cast a spell, abracadabra, every 12-year-old on the planet suddenly has learned what skill? We've heard emotional intelligence, being smart with money, coding, teamwork. Of course, you can repeat something, but make sure to tell us why you think that's important.
So for me, something that I really have helped me and actually I don't know if it was 12 for me or was 13 14, but something around this age. A person told me that basically, if you don't believe in yourself, nobody is going to believe in you. Okay, so this sentence for me was okay. It's clear. If I don't believe that I can do something, I'm most likely not going to do it, and nobody is going to say, let's say, um, 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 go with me or follow me or whatever. And this is something that I really think that as young you learn, it's better, because the majority of the time we put lines or limiting belief on ourselves, but it's not anybody imposing us this limiting belief. It's basically ourselves just saying, I cannot do it. I cannot basically push down my weight, for example, or I cannot basically be more healthy, or I cannot basically apply for this job or this company, or I cannot basically. It's you, the one that is saying you not. So basically, the first thing is starting by saying, hey, you should believe in yourself. So if you want to do it, believe that you can do it, because the entire world will tell you the opposite. So you have to build this resilience, build this push forward, and it's something that as you have said 12, but ideally 7, 5, basically, if you really want to do something, as early you understand that basically you are the only one that can make it happen for yourself. It's the best learning that you can get, because later you only have to basically believe in you, and continue pushing.
Especially that I think on the psychological front, it's one thing to have a properly developed confidence, and it's one thing to try to develop that confidence later, because you're working with foundation that's not as good as if you would start at the age of 5 or 7. So essentially, you need to have your own buy-in with yourself before you try to sell to others. You need to be the evangelist of yourself to convince others that you're basically worth what you're trying to sell. So that was all of my questions. We're hearing in the comments that they love your approach, so good answer. We got a more technical question. Finally, how do you utilize machine learning and data to improve assessing risk? We spoke about data, but the machine learning part is maybe where we should focus here.
Yeah. So in the machine learning, at the end is we are capturing data from a customer, and later as insurance company, we have the claims information that is the result. Is basically knowing if something good or bad happened. Okay. So we have to correlate, and we work on correlating this information in order to see, okay, which is the correlation between certain events and certain behavior, and the probability of something bad happened. Okay, and this is where machine learning centers, because finding these correlations is not something that you can imagine. Sometimes there is correlations from between two different events that you will not expect. And here is where basically we are applying machine learning in order to understand the risk, on assessing risk exactly. Later on improving, it's as well machine learning on coaching. That it's another thing. Is basically try a way of coach a person by his profile, and basically if it works, the result, like the evolution and the behavior change on the way that you want, then you are learning. And the model it's improving, and as well we apply machine learning. So we have basically both parts of the solution for the improving the risk assessing, let's say.
So, dear anonymous LinkedIn user, I think that should answer your question. So, one last question, also from another LinkedIn user, slightly less technical. Do you see Lemonade expanding into EU as your competitor? Because I think they are only US based for now, but it might be a case of regulation, perhaps, that they have mastered the 50 states of the United States, whilst the game is completely different in the EU. Is that the case?
I think that Lemonade it's actually in EU, in Germany, and I think that in Netherlands. I'm sure that basically they're gonna continue the expansion. They are based on US and they are really good experts in the US. And for sure, I really will love to basically have them as here in the EU market, basically because we have two different approaches. They are really a consumer insurance. They are acquiring customers through marketing acquisition channels and really marketing journeys. We believe more in enabling our digital advisors and to have basically more partners and customers through different partnerships and deals. This has been something that worked for us. So let's say I think that the insurance industry, it's a 5% of the world whole economy. It's trillions of dollars on the market. Competition is not really something that we are worried about. Ideally, the work that they are doing and the work that we are doing push towards together to be the best for the end user and the consumer. That is what we both are looking.
All right, one last question from Dominica. What about the balance between getting data to make your product better and better and privacy? How do you cope with the problem of getting needed data but respecting the privacy? I think we slightly touched upon this, but perhaps it's been somehow rephrased.
Yep, but I can answer. So at the end, privacy, it's something that we respect, and if a customer doesn't want to give us the data, for us it's fine. So we don't need it in order to give our services to our customer. Of course, we need, if we want to basically together with the customer, we want to improve the service towards the risk prevention. But he can continue having the normal insurance product, the static one, being 100% covered, tailor his products, being fully digital, raising a claim without speaking anybody if he doesn't want, and also on. So the privacy is something that we respect, and we only want his data if he really want to basically have an improvement on services and work together with us on the risk prevention and coaching.
Okay, so that was the last of all the questions, and we are just 2 minutes before an hour, so we are perfect with timing. So, sir, thank you so much for being a great guest, for all of the answers, and I'm really happy that I found someone else who also digs The Mentalist. I haven't heard anybody also saying that they like it, so, it really pleases me.
Thank you very much for having me here. It was a pleasure, Philip. I think you're a really amazing host. So, and thank you everybody that was listening and tuning in. It was a pleasure.
Absolutely. So everybody, whilst we will be seeing you next week, same time, more or less, for another episode of Disruption Talks, you can view all of the previous episodes or rewatch this one later on, either on our LinkedIn page or YouTube channels or other social media. So once again, thank you for being such a great guest. Thank you, dear great audience, and see you next week. Thanks a lot. Bye-bye.
Thank you.